Hello, folks. It's your guy Toxic. How's everyone doing? So, today I'll be taking you guys on how I do my analysis. As you can see, today we had a very good trade today in the. This is GU. You can see GU. We had a very swing trade today, guys. Like you can see, we destroyed TP today. Like this, a 7:6 that we had today on GU. So I'll be taking you guys on how I take my analysis. So firstly, you can see we even have silver. You can see our silver almost getting to TP also, and of course that's gold. So gold we were stop out. That's gold we were stop out at this zone. So that's not a problem. So I'll take you guys on how I usually take my trades. So firstly, we want to begin with the DXY. Okay, so this is our DXY. So that's why we need to go to our higher time frame, to the 1 month time frame. So this is our 1 month time frame. As you can see, in our 1 month we have been going bullish. So we are looking for buy to buy opportunities, buy to buy opportunities, buy to buy opportunities. But now, you will see we had a liquidity situated here. We had liquidity in the market. You know, I always say market moves based on liquidity, guys. So before trading the forex market, you start by identifying your trend of the market. You identify where liquidity are situated in the market, and from there you can start having a very good trade. So there we had the liquidity, we had the break of structure here, and you can also see we had the we had the break of structure here, and you can also see we had the break of structure at that point. So after that, you could see normally the whole of this zone is supposed to be our supply zone. Sorry, a demand zone. The demand This is supposed to be a demand zone all the way here. The whole of this area is supposed to be demand. So that's our demand zone. We had to tap in our demand, and you start seeing the rejection. You start seeing how the market start rejecting. So after at this level, we have liquidity situated all the way here. So from your perspective in trading, when you approach the market, what you're supposed to be expecting is to identify the trend of the market, because you trade only with the trend of the market. So guys, after identifying and putting all our confluences in the market, you can go now to our 1 week to see what the market will do. So this is our 1 week time frame. You can see in our 1 week, let's see what the market will tell us in our 1 week time frame. Okay, so this is our 1 week. We'll have a fair value gap, and we'll have a draw on liquidity. So at this level, this is our fair value gap here. We have the fair value gap all the way here. You can see, for those who knows about fair value gap, we'll have a fair value gap there. We'll have a draw on liquidity up here, and you can see after tapping in our key zone, we'll have a bullish pin bar candle that is forming. So now, after putting all our confluences, I will see that the XY is about getting bullish now, because we'll have a fair value gap that needs to be filled, and we'll have a liquidity draw. So what is your next anticipation? Your next anticipation is to go straight to your 1 day time frame. That's why we call it top down analysis. Always do your top down analysis, guys, because with the top down analysis, that's when you can identify the real trend of the market. You can identify where liquidity is situated. You can identify a lot of things when you do your top down analysis. So now in our daily time frame, what can you see? Each candlestick you see here takes 1 day to form. So at this level here, we have a change in the state of delivery. I know so many people don't know what it means in this change in the state of delivery, but let me show you guys. At this level, we have a change in the state of delivery, because we had a bullish engulfing candlestick. When you see a bullish engulfing candlestick actually engulfing two candlesticks, that's to tell you that the strength of the buyers in the market are more than the strength of the sellers in the market. So after having that change in the state of delivery, normally what we will have, we will have a fair value gap in the smaller time frame. Like if we had to go to our 4 hours time frame, if we had to go to our 4 hours time frame, we will have a demand zone or a fair value gap that the market needs to come back and fill in. So after giving us that change on in the state of delivery, we had this liquidity drawdown here. After this liquidity drawdown here, we had this liquidity draw. Let me show you guys. We had this liquidity. We had this draw in liquidity all the way down here. So this is it, guys. We had this draw of liquidity, and you can see the market came and tapped in into that draw on liquidity, and you can see the market actually buying and going to the upside. So now if you go to our 1 hour, you actually see the chart really clear because you actually see what the market did. So this is it. At this level, you can see our draw liquidity, our tap in demand, and boom, the market actually moving back to the upside, giving us in DXY this the 6 is to 90 97 risks to reward in this DXY. So okay, so that's just by the way. So now let's go to our major currency pairs we trade. So we'll be going down to our GU. Okay, so this GU, as you can see, guys, this GU, what can you see today? We never only hit TP, but we destroyed our TP because the market actually went according to our prediction. So let's go to the higher time frame first, because we always do top down analysis. We don't trade based on smaller time frame. So this our high time frame. What can you see? The market has been giving a series of downtrend, like the market is downtrending, giving us lower lows, lower highs, lower lows, lower highs. And if you look, you'll be seeing break of structures that the market has been giving us. Yeah, you can be seeing these are break of structures that the market has been giving us in the downside. We have break of structures in the downside, like continuous break of structures. So one thing I would like to note first is when trading the forex market moves in, the forex market moves like this. The forex market moves giving you either consistent lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, or giving you higher highs, higher lows, higher high, higher lows. So yeah, we're in a bearish scenario, so we have lower lows and lower highs. So here you can see, we had our break of structure here, we had our break of structure here, we had our break of structure here, and all of these moves are corrective moves. So the market come up to sweep liquidity or fill in demand before going back down. So what did we had here? At this level here, we had the demand zone. At this level all the way here, we had the demand zone here. That the market actually came back to fill in the demand before actually continue going back down trend to fill out the liquidity situated all the way down here. So from that level now, you can go to your 1 week time frame, and in your 1 week time frame, what will you observe? This our 1 week time frame. You observe immediately we had the tap in the demand. After we had that tap in demand, you can start seeing the market actually rejecting. You can actually see the market rejecting. So now, what are your anticipation? Your anticipation now is okay. This market needs to start going back down trending because it's a downtrend market. So we need to start looking for sell opportunities in this market. If you have your capital or you're a swing trader, you can actually take a position from here and you can hold for a very long period of time because your confluences from the higher time frame to the lower time frame shows you that the market will be downtrending for a very long time. So now what are you to look at? What you are to look at now is your daily time frame. So all the way to our daily time frame. Yeah, all the way to our daily time frame. What can you observe? All the way to our daily time frame, what our candle range high and our candle range low that we marked out yesterday, and you can see we have a break in, like a change in the state of delivery, actually breaking this the candle range low here. This is the candle range high of yesterday, and we have now this break of structure giving us a change in the state of delivery in our higher time frame, that's in our daily time frame, telling us that this market now have decided to come down all the way down here because this is our next drawn liquidity, and we'll have another drawn liquidity all the way down here. But firstly, let's focus on this drawn liquidity here first, because that's where we are looking for take profit. So now, coming to our 4 hours, you can see this our 4 hours. This is the trade we had today. You can see a very smooth trade. We had that's a 7:6 risk to reward today in our trade we took. What can I what can I tell most traders out there? Before you want to take a trade, always be patient. Wait to see confirmations, because some people just trade based on, and how can I put, some people just trade based on what they see confirmation. So it's always good you wait for your confirmation to see what the market is actually telling you, because what when you wait for confirmation, you always have good and perfect trades. So now, what we are looking at, I'll tell you guys how I took my entry of this trade. So the whole of yesterday, that was Monday, this trade was just consolidating. I never traded yesterday because the trade was just consolidating in one place. I waited for a confirmation, but I couldn't see a confirmation. That was on Tuesday, sorry. Tuesday, I couldn't see a good confirmation because the market was just in the consolidating. So when I woke up today, I had to wait to see a shift in. I had to wait today to see a change in the state of delivery. So that was what happened. After I spotted out this data soup up here, I had to see a change in the state of delivery. So that was my change in the state of delivery. I had to wait back the market to come all the way to that, to this demand up here, because this zone now acted like a demand. The market come all the way up, and after tapping in, I took my sell from that point, and you can see what we came straight down to our TP, and we never only like we destroyed TP, guys. So that's how the forex market works. It's just all about patience, you putting your confluences, and you knowing what to do. And don't forget, top down analysis are always the best, because it makes you know the real trend of the market, where liquidity lies, and all the rest. So guys, wish to make more videos for you guys. Chill out.